All right, give us a sense of what you're expecting from Lowe's coming up, as well as your rating and your price target.
So we are expecting that Lowe's is going to show the home improvement sector is bouncing along the bottom. It's probably going to do a comp that's a little bit lower than Home Depot, most likely in the down 3% area, given that it has less exposure to some of the factors that had improved for Home Depot from the first to the second quarter. That's like California, the pro sub customer segment. Still, we think that Lowe's is going to show that it's generating a track record of consistency, which over time should lead to better performance of the stock. We have a buy rating and a $170 price target.
All right, very interesting. 170, interesting.
Sorry, $270.
I'm about to say, Michael, you're very bearish on this stock. I was just taking a look. 270 to be clear. So you have a good amount of upside for Lowe's. Very different story than 170. So I do want to ask you, we just talked about mortgage rates hitting a multi-year high yesterday. I believe it was 7.137. Either way, a 20-year high when it comes to mortgage rates. How does that impact the business of Lowe's, where it's a much higher percentage of do-it-yourselfers?
So what's happening with these high mortgage rates, Frank, is that it's forcing people to stay in place. It's becoming too expensive to move, especially in light of folks having mortgages that are largely struck at 3 to 4%, existing mortgages that are struck at 3 to 4%. So there's a strong disincentive to move at this point. As a result, consumers are looking around saying, if I'm going to be here for a while, I'm going to do some work on my home. And that is benefiting the home improvement sector. Where there's been an offset is some of those purchases that we all did during COVID, such as buying a new grill or patio furniture or some appliances. Lowe's has a little bit more exposure to those areas, and that's where it's seeing weakness right now.
What about rising rates? How does that impact Lowe's? Again, we talked about how it impacts the housing market, which directly impacts Lowe's. But how does it impact Lowe's overall business and also the broader retail sector as we continue to talk about rates rising?
So it could lead to less appetite to do big ticket remodels, given that consumers tend to finance those with either a home equity line or some other form of credit. So that it's going to make those purchases a bit more expensive, the rising interest rates. What we expect, though, in lieu of that, is consumers will do smaller items. Instead of redoing their entire kitchen, they may do a backsplash or a countertop. And so we'll see more modular purchases over time. As rates come down, it will provide an incentive to do some of those larger ticket purchases.
So that's Lowe's. What about broader retail?
Broader retail has seen a continuation of trends from the last couple of quarters where consumable prices on things like food and household products are very expensive, and that's crowded out spending on more discretionary purchases. Now, the rate of inflation is coming down, and that is good news because wages are still growing. That means that the consumer has more purchasing power for those things like sporting goods, consumer electronics, furniture. Eventually, that should lead to better trends. But right now, the consumer is showing more desire to buy needs rather than wants.